Welcome to the Overflow Mindset Group. Hopefully you're experiencing overflow in your life. Just wanted to mention, overflow is not always like material or financial. Overflow comes in many different forms. You could have overflow of happiness, overflow of love, overflow of fun. You could have overflow of technology. You could have overflow of knowledge, overflow of skills, experiences. Just align yourself with people who are going on the path you want to go on, and you'll experience overflow just from them talking with you, just for them sharing their ideas, sharing their journey with you. Sometimes someone who's in the same place that you are, it just has a different perspective on the same journey. And so experience your overflow, and we'll jump right into the markets here. And we'll talk about today just the overall strategy for how do you determine where the market may turn or give you information that it is turning in any particular direction. It could be down, it could be up. It depends on, if you're an investor, you choose the vehicles that you want to choose as far as how you invest in something. So you could invest in stock options, which would allow you to buy a call or a put, which will allow you to either expect the price to go up or expect the price to go down. You could buy common stock. You could be involved in futures and other things of that nature. So today I'm actually going to talk about futures. So within the futures market, we're looking at the basic future expected prices for different instruments and different commodities, and indices is another thing that we look at. Also, there may be soybean and corn and some other things as well that we'll look at here. But the main thing with the commodities is they run overnight. So during the week, the commodities market is open for most assets. So if you ever wonder, like in the mornings when the S&P opens, the Nasdaq or the Russell 2000 or the Dow, when they open, how do they determine that there's a gap up or there's a gap down? And the reason why that happens really is because the futures market is still going overnight. So there's people buying and selling overnight. So when you wake up, the price could be at a different price. And then in the morning, your instruments like the SPY and some of these other ETFs and things that you may be investing in, they gap up or down based on what happened overnight. So the futures market, there's some tax benefits to trade in the futures market. But the futures market is very similar to the foreign exchange market. So if you follow the foreign exchange market, some foreign brokers also allow you to trade S&P 500, Nasdaq 100, Russell 2000, Dow 30 is what they might refer to it as. But they really are the same instruments as far as the price. They seem to follow each other very tightly and appear to be pretty much the same instruments. The margin requirements to trade futures is a little bit higher than it is for Forex, for foreign exchange. So for the foreign exchange brokers, that is. So that is why some people choose to trade Forex over the futures market. Is mainly because of the requirement for margin. And during the day, the margins are relatively reasonable, but at night the margins become pretty large for full assets. Now they do have mini assets or micro assets and now nano assets in some cases where they have created a smaller size where you could actually trade these a little bit easier. But the point that we're going to go into, you can do your research on foreign exchange versus futures market, and you could look at different brokers to see what margin requirements they have and that sort of thing. So you can do that. But the main thing we're going to look at here is that these are still the markets. So S&P 500, list of 500 companies that is tracked via this index. Nasdaq 100, usually heavily tech companies, 100 companies listed there. Russell 2000, Dow 30. All of these are still tracking the market and the overall health of the market. So what we're going to do is just look at these assets in the futures market so that we can get a feel for what's going on in the market overall. So right now we're looking at the S&P 500. Again, I have the daily chart, I have a 2-hour chart, I have a 15-minute chart. And I will open up the daily chart just to start with, because we generally want to always look at the higher time frame, and that's, we do something called top-down analysis. Start with the daily, maybe even go to the weekly and monthly in some cases, but start at that high level, drop down to about the 2 hour, then drop down to the 15-minute, and just sort of look at what's going on. So as we look at the daily chart, so what I'm going to do here is kind of pull this back a bit, and I'm going to move this up. So one of the things that we've been watching with the S&P 500, the Dow, and some of these others is that they all hit a ceiling. They all eventually hit a ceiling. This one was about 4,800 ceiling, and then they started to decline. Now they were on a run for a long time. They were above the 200 EMA watermark, and now they've been diving into that 200 EMA watermark repeatedly here, and we've had more of a downtrend or a retracement, because when you look at the grand scheme of things, we haven't really fallen all the way back down to the pandemic levels, which was here, and the drop that occurred there. But percentage-wise, what I've kind of added to the screen here is what other events, I guess, took place, and what the percentage, just percentage-wise, and of course these were on maybe different indices, but what percentage-wise did they decline? So when we look at the Great Depression, that was about a 14% decline. Black Monday was about 20%, of course, in one day decline. And then you got COVID-19, which was roughly about 36%. Or 40%. These don't have to be exact numbers, so I'm not, but the idea is that we're going to getting a perspective on what's going on. How bad is it? And then the bigger dip was the subprime mortgage meltdown. So when you look at things and put it in perspective, we've had a pretty rough time, of course, but things are actually starting to look up. I sort of called it around June 15th that the market would begin to recover. So we've gotten some recovery. Now we're in the midst of another pullback. The question is, will this pullback, take us even further and deeper down, or will we just continue to bounce to the upside? And the price and the market is going to tell us that. So the things that we're going to be looking at might be things like our RSI indicator here. When we're at a high level here, you notice that we sort of peaked out and price started to come down. Now we're down here at this low level. So we would expect, either a few bounces down here in the low level, but eventually for that to go up. And this is why I'm excited. I think everybody should be excited about the overflow that will happen eventually in the markets. In the United States, typically our stock markets go up. They do go down, but typically they go up. So at some point, the price is going to begin to move up, and move up substantially, and it'll be, all the story in the news and that sort of thing. So at any rate, so as we look at price now, and I do have some trend lines on here from lower time frames that may be kind of blocking our view. Let me see if I can, here we go, make this a little better. So as we had this recovery, since about June 15th, we had this recovery, and we did come out of the water. The 200 EMA, I refer to as water, just more of a visual to give us an idea of what's going on. We were above the 50-day moving average, and this is the 14-day moving average as well, just sort of helping us to see the trend even a little bit better. But the idea here is that we're on a decline right now. So price has been going down. Now, we did have some key levels that it hit. So 3,900 roughly, it came down to that level and rejected off that level pretty strongly. So what we're going to do is watch to see what happens at this particular level. Will we get another drop and maybe touch it again and then go, or will we fall below this particular level and that'll be it? So that's what we're going to start to watch. As you notice, even though the stock market is closed, the S&P futures is actually still moving. So again, this is how your gaps are created. If this price comes down tonight or goes up, there's going to be a gap up or a gap down based on wherever that price is. All right. So let's take another look. So we're doing top-down analysis. So at a higher level, we're saying the price is moving down and it's in a place where it might be ready to start moving up. And we see that we got this major rejection here showing that maybe price will start to move up. All right. So then we'll go to the 2-hour. As we move over to the 2-hour, things are a little bit more clear as far as trend line breaks. So generally what we're trading are trend line breaks. We're using the price and the moving averages to give us some idea of where what direction price is moving, and we said the price is moving down. So what we're looking for pretty much at all times right now is for a trend line break to the downside. So here we received a trend line break and price continued down. Here we got another trend line break, prices continued down. Now we've drawn another trend line, and again, this is early for the trend line. So, you can be as aggressive as you want to be with the trend line or not so aggressive is sort of a feel that you might get over time if you trade a particular instrument. If you want to just trade breaks of price levels, you would sort of draw your lines this way. If you want to trade counter trend line breaks, you're going to want to draw them based on the counter trend. So the main trend is down. The counter trend are these pullbacks, and we're waiting for the price to go ahead and finish that pullback and then drop down so that we can get in at whatever our optimal price might be here. And we know where price breaks through. So as we watch this, we'll see what happens. Again, you may give it some room to play around here, but the idea is that once it gets to a certain point, we expect it to continue to drop unless this is some sort of reversal. And we'll start to see signs of reversal if we see higher highs or price trading above these moving averages. So, and then if we drop down again to the 15-minute time frame, we have the same thing. Again, you're going to be getting in even earlier than on the 2-hour time frame because these are 15-minute candles. So as soon as this breaks for 15 minutes, you're going to know that it broke through and closed on the other side, and then it continues on down. Same thing here. You're going to get some breakthrough. There's a little bit of a pullback, and then you get the breakthrough to retest, and then it continues to drop. So here we are. If we want it to be aggressive, we could draw a trend line like this based on the 15-minute trend. And see if what percentage of this might break and give us, some gains based on the trend breaking a lot sooner. If we were trading a 2-hour, another time frame, maybe we want to move it out a bit to give ourselves some room there. But if we're trading a 15-minute, you could adjust that. And again, if you want to trade just a price level break, if it happened to break the price, you could do that. I would advise, based on the way that we analyze the market, we advise, trend line, counter trend line breaks is the best way to analyze and enter the market. There's a lot of different methods of trading using Fibonacci and other things, Elliott wave and some of these other things. And these are all great ways to trade. And I'm just trying to give everyone just that beginner step of, hey, how can I get in here and understand what's going on, look at what's going on and make a decision as to what to do as far as analyzing the market, not what to do as far as making an actual trade, but what to do as far as analyzing the market. So this is just a simple way to do it. Again, there's a lot more technicals that you could get into, and those are all great. But you really just need a simple foundation, I believe, to get started. There are many things at play within the markets. All right, so that gives us somewhat of a game plan for S&P 500. We're waiting to see, okay, is it going to start trading above this moving average? Is it going to break back down? And we're not going to really do anything until something happens with this counter trend line, or we start to see price just sort of going upwards and not coming back. All right. So that's the S&P 500. We can look at Nasdaq, and we should see a similar story on Nasdaq. You can see higher time frame is moving downward. Based on that knowledge of that is moving downward, we're looking for counter trend line breaks to the downside. Counter trend line breaks to the downside. Optimal entries. We would draw another trend line, here to counter trend line to determine where it might break again if it's going to break. And then we get into Russell 2000, very similar story, downtrend. All these indices are going to be very similar. We look at the Dow moving down on the 2-hour. We got pretty much similar patterns there. So what we're going to do is look at a few other things like crude oil. So with crude oil, as you see on the daily, it's been on a downtrend, right? So previously, the price of oil was going up, So as price of oil was going up, everybody was complaining about the price of oil and that sort of thing. And now it's going down, at least to, as far as price per barrel. It may not go down at the gas station as quickly as this goes down. But the main thing that we want to note about crude oil is whether it's within the bounds of what it normally does or not. So if we look at crude oil, and we're looking at a daily time frame, right? So if we go back to 2014, roughly 2014, and since 2014, the price of crude oil has always been below $75 a barrel. Since 2014. So it has been higher in the past, of course, but that's pretty much the price that has been below, for the longest time. So what we're expecting right now, that price has broken out of that, going up and now it's starting to come down, is that it's going to come down and test this $75 a barrel price again. And once it tests that price, it's either going to decide, okay, we're just going to have high prices from here, or it's going to decide, okay, let me get back into the range that I'm normally in, which is below 75, and just trade there, which could be years, But the idea is that as we see the price, this is a daily chart, we see prices moving downward, for the most part. So as we look at our 2-hour chart and some of the other charts, we can determine if there are other entries that we could get. And then we could even look at the 15-minute chart and look for, again, those counter trend line breaks to the downside. Right now it's just moving down. So that's what's going on. So that's what we would be looking for crude oil, for it to eventually, it may take a few weeks to hit $75. All right. So then we go on to gold. Looking at gold, you'll see that gold has been in the downtrend. It's been in the downtrend since May? It's been in the downtrend here, and basically looking for column trend line breaks to the downside. If it pulls back to our 50-day moving average, we're still looking for it to go counter trend line to the downside and continue. So it did drop from 1800 to 1700. What you find with gold is it does bounce between, I guess, 1900, 1800, and 1700. It might drop down to 1600, but as you see, for several, a couple years now, it has been in this particular range, like above 1700. So we'll just continue to watch that and see what happens. But it makes pretty long moves once it does start to move in any particular direction. Again, we are now just started hitting that 1700 level. We are the RSI is a bit low here, so we would expect at least some sort of a pullback. And if it is going to drop more, it probably will pull back before it drops down. So again, just counter trend line breaks to the downside is really what we're looking for gold right now. But we're going to be cautious at this point now that it's finally hit 1700, just to see what it's going to do. All right, you got lean hog. You can see that's in a downtrend. You can use counter trend line breaks there. Same thing with copper. You can use counter trend line breaks here with copper, even down to the 15-minute time frame. You have coffee here. Let's skip that one. Okay, so yeah, lean cattle. So lean cattle is actually above the watermark, right? So we have this 200-day moving average watermark here, and price has been above that. So we're in an uptrend. So generally, what we want to look for live cattle is our counter trend line breaks to the upside. We could do them on a larger macro level, kind of at the daily, or we could get down to the 2-hour and even into the 15-minute, counter trend line breaks. Once we lose momentum, which we did end up with a double top here at the very top here, which is where price goes up two times at pretty much the same price level. So we are going to be cautious at this point, and we've run pretty far and gotten close to these other tops that are over here. So we're going to be cautious at this point just to see if it's going to pull back first before continuing to move to the upside. But overall, the price of live cattle has been going up over this time span. So, all right, natural gas, same thing, hit all-time highs, has been playing around with that level for a little bit here, and looking for column trend line breaks really to the upside. It did break out a bit here, but we are also at that all-time high level as well, where it's been sort of having a little bit of trouble breaking all the way out. It did go up and come back, but it hasn't really broken out from that level. But that's where we are right now. Bonds, going down. You can see the downward movement. Again, we're just trying to catch the trend on a downward movement, because that's what we see, a big downward moving trend. We're trying to catch that with counter trend line breaks. And that's what we're doing. Here's actually another level here on the 15-minute. We can see, let me pull that up, make it bigger. Did the daily, sorry about that, 15-minute. So on the 15-minute, what we have is a pullback. So we got a counter trend line that we can draw here, and we're waiting for that to break. This one here would have been a good one as well, or you could have, more aggressively wait for it here. So that's really all we're waiting for, to see what happens with that, if you're in the bond market there. Okay, so Weat, similar, they were on the 15-minute. Let's go back up, because it's always better to look at it at the daily first. As we can see, it's been more or less on a downtrend. We did hit the 50-day moving average, and we're kind of close to getting out of the water. So I would just wait on Weat just to see what's going to happen, what more is going to happen. The downtrend that we started, we were having good trend line breaks before, but this sort of starting to even out a bit there and move up a little bit. So let's go on. We got bonds. Here we have corn. So corn has broken out, is above the 200-day EMA watermark. There's a gap here, which I've indicated in this blue box, that needs to be filled. So price needs to trade within this range. We did get a push up into it. Now we have a bit of a pullback. We do see the 50-day moving average as support. We have the 14-day moving average as support, and pretty much the 200. So the idea is we're hoping that these moving averages will sweep that price up from here, waiting on the counter trend line break. If it doesn't break, before maybe starting to trade below those, then, we'll have to call off the bullish momentum that we thought we had. So, but that's what we're looking at. And you can look at that in all the different time frames, and you can definitely see counter trend line breaks in different directions depending on your bias for that one. Here we have soybean. Same thing, was moving down, starting to move up a bit, but you can still use your counter trend line breaks to the downside, to catch these smaller moves. But now it's starting to tighten up as far as the price, so we'll have to wait and see, is that going to really start to break down, or will it eventually pull up? All right. Also in the futures market, you have currencies as well. So again, I mentioned like the foreign exchange market or Forex market versus the futures market. Very similar markets, really. Pricing, pretty similar. Instruments are similar. Again, it just is a preference as to whether you trade Forex or you trade futures. But you'll find many of the same instruments or similar instruments, let's say. So here's the Australian dollar, and you could trade that. Here's the British pound futures. You could trade that. Canadian dollar futures. And again, if you were to look at foreign exchange market, you would see similar charts. The euro, we were talking about the parity. I know a lot of Forex traders trade the euro. Here's the parity that we see. We just broke through the counter trend line here. So we had a breakthrough, and then it sort of started to pull back, but it's playing with that counter trend line again. So the idea is that we're expecting it to go down. Now, the other problem that we see here is that this $1 mark is sort of like a magnet right now, because it's so significant, the parity between the two, the dollar and the euro. So that could be a problem with it dropping much further. But we are below that trend line at this point, and showing it as resistance at this point. So the idea is that we expect that price to go down from here. All right. Let's see, Japanese yen. Same thing, counter trend line breaks to the downside. This is moving to the downside. So counter trend line breaks, you look for that counter trend line break on the 2 hour. You can look at it on the 15-minute and get even tighter and more opportunities. Like here's the one that was drawn on the 2 hour. But if you look at the 15-minute, you can see there's many, many more opportunities on the 15-minute. And if you go down even deeper into time frames, I guess you could go down to the seconds and everything and really get into these things. But at any rate, then we have the Swiss franc. And looking here, you can see it's on a downtrend, so we would, again, start to look for it to go down. We're not really trying to call it going up now. This one, yeah, it could sort of slow down at this point. But, as far as our trading, we always be looking for it to go down, because that's the direction it's going right this very moment. But we have to be cautious based on the RSI level. Right. And then you have many versions of that in the futures market. You have many versions, micro versions of these same instruments, which just traded with smaller margin and smaller movement per point or per tick. All right. And then you also have Bitcoin futures as well. Bitcoin futures and so that'll probably be one of the last ones I'll just talk about today. But yeah, Bitcoin futures, there's some nano Bitcoin futures as well. Again, the margin requirements for some of these instruments for overnight, keeping the holding the position overnight are kind of high in many people's perspective. But there are tax advantages to trading futures versus like Forex or other instruments. So, but as you see, futures are very similar to Forex, and that was my main point, just to bring that out, that it's very similar. The instruments are similar. You could watch these charts and trade it in Forex if you wanted to, but that's the story with futures. So I guess we'll go ahead and wrap this one up, and Overflow.